Welcome to another episode of Uncontested Investing. I'm your host, Nate Zielinski, and we have another great episode for you today. I'm happy to be joined by Gary Mascitis. I think this is going to be a great episode in terms of some perseverance and some adaptability in the real estate investment space. Gary, thank you so much for joining me, founder of GSM Commercial Capital. Introduce yourself, tell the audience a little bit about yourself.
Thanks, Nate. It's really a pleasure to be here. I've been working with RCN for a lot of years, and it's always been a great experience. I spent the first 23 years of my career working on Wall Street and came into the real estate lending space back in 2016. Started out as a private lender, and it's developed into kind of a full-service commercial lending company since then.
Awesome. Yeah, so definitely a wealth of knowledge. I think that's the best place to start. So I think people, their ears perk up, right? When they hear somebody's worked on Wall Street, they want to know, what that experience was like. So as you worked over for 2 decades in Wall Street, what were some of the big takeaways? Do you have any lessons that you learned and that you're able to use to this day?
Absolutely. It was a fantastic experience overall being on Wall Street. Like being anywhere, there's ups and downs. The financial crisis wasn't a whole lot of fun, as you can imagine. But a couple key takeaways, I would say, were that one thing I learned is that, so my clients when I was on Wall Street were people like hedge fund managers, pension fund managers, mutual fund managers, highly educated investment professionals. And so, while I didn't look at myself as always the sharpest tool in the shed, right, relative to some of these people that were MIT applied math majors, that were my client base, what I learned to do was take a look at kind of the overall market from a top-down approach instead of rolling up your sleeves from a bottom-up approach like a research analyst would, let's say, when analyzing a company. When you're looking from the top down, it's kind of taking a step back and looking from 30,000 feet at the situation, at the overall market that you're dealing with, at your overall client base, at all the investment possibilities that are there, and really being able to simplify things into an organized fashion and, take a lot of that complexity out of things. That's one of the main takeaways, and I carry that into the lending and investing world today in real estate. The other thing, I think the other major takeaway is, while I was on Wall Street, I was involved with about $150 billion with a B of capital raises, which is obviously a big number. But, when I look back at it, I was able to be part of helping companies across every cross-section, every industry raising capital. But it wasn't as tangible as working with, let's say, an individual real estate investor and changing their life through what I'm able to help, provide to them. So yes, I was helping companies thrive or survive by raising capital for them, but it's just, maybe it feels like there's a little more gamification to it because it's such a different level than working with someone necessarily one-on-one.
Nice.
Yeah.
And that's exactly why you're sitting in this chair today, right? You spent the last 7-8 years building GSM Commercial Capital, helping those people. So what was that transition like? How did you decide real estate investing was what your next step in your career wanted to be?
Sure. So, it's funny, when I was on Wall Street, I always thought more of financial investments instead of hard assets. So I never really thought about real estate investing. Quite frankly, I thought of it as boring when I was on Wall Street, which was a major mistake on my part. And I had the good fortune of my best friend and his 2 sons. They own about 500 units in the Lehigh Valley in Pennsylvania. And, they approached me at one point as things started to decline from an employment perspective on Wall Street. They approached me and basically, they said, hey, you have a lot of relationships with hedge fund managers and other, sources of wealth that may have interest in lending in the real estate space. So basically, I ended up leaving Wall Street to become a private lender originally with truly private money, some of my former hedge fund clients, their friends and family money, et cetera. And then, just kind of very quickly learned and observed that there's so much more opportunity in the lending space. And I didn't want to just be that private lender that lender that only has one or two loan types where, the proverbial hammer where everything looks like a nail and, you're just trying to whack the same thing all day long or fit all different types of shapes into a round hole. It doesn't really work. So, that's what kind of caused me to make the transition. Was my friends approaching me with that opportunity, and I was blessed to have that opportunity, and it's turned into just something much broader from
awesome. Yeah, that's great. That's great. I'm excited for this segment. We have the Money Making Minute coming up, and Gary and I talked off air before the show, and this one's going to be hard to top. I think Gary's definitely going to win some people over here. So if you take anything away from this episode, it might just be the Money Making Minute. Gary, let's get into it.
I think we're going to be talking about the Beyond BRRRR strategy and, again, approaching things from the top down, like I mentioned on Wall Street. When I look at how so many real estate investors go about building, or just not even real estate investors, people that are investing on the side, right? They don't have to be full-time. They could be part-time real estate, full-time real estate. But when I take a look at things, so many have followed the BRRRR strategy, which has been incredible in getting people to financial freedom in many cases. But once it gets to a certain level, I noticed that there was a little bit of a breakdown in the strategy where they really weren't thinking about things from a portfolio perspective. So let's say, for example, I could have someone come to me, let's say they've built a portfolio of, 10 or 20 units. They own them free and clear, or they have loans against all their properties. But because they looked at everything just from an individual property and loan perspective, they ended up with a portfolio that if you were looking at that overall portfolio to find out how to most effectively and efficiently finance it, it's nowhere near there. They could, I'll give you a perfect example. I had a client that came to me that was having some cash flow issues because basically his whole real estate portfolio was at about a 35% loan to value. So he had loans against every property, and he didn't really have any flexibility to basically restructure his personal finances. He ended up with personal lines of credit, credit cards, large car payments, all these different loan payments. And from a cash flow perspective, he was sucking wind. He was like negative cash flow, yet he had this wonderful portfolio that he built of about 30 units, but it just wasn't optimized. So we took a look at it, and basically I said, okay, well, here's how we can help increase your cash flow. We'll put a line of credit in place against the real estate as well. So basically we did a first mortgage against a subset of the properties, a line of credit against a subset of the properties, and it freed up thousands of dollars a month of cash flow that he just didn't really have the, I don't know. He just didn't think about looking at things from that portfolio standpoint. So that's a really, I guess, good example. Effectively, I think a lot of people with the BRRRR strategy hit a wall due to the BRRRR strategy generally encouraging low or no leverage with the acquisitions. So, I had another guy this week that called me. He has about 20 units, 40 years old. He owns them all free and clear. And he's like, I don't know what I want to do now. I feel like I got to that place that I wanted to get to, but now I want to get somewhere else. How do I go about doing that, Gary? And so we talked about some strategies to employ some leverage and, maybe taking a look at selling some of the smaller properties, because this is a blind spot that so many investors have where they own a portfolio of properties, and when you look at it, they still own the first or second single family or two family home that they bought, and it has all this equity tied up in it, and it's really not serving them anymore. So a lot of times they'll kind of take and uncover those blind spots and say, hey, well, you're talking about growing your portfolio and scaling up. Let's take a look at selling some of these smaller single family, two family properties that really aren't serving that purpose anymore. Effectively, what got you here ain't going to get you there. And, that's something I guess I've dubbed it the Beyond BRRRR strategy, but that's just kind of how I think about things.
It's got a nice ring to it for sure. And, that brings up a great point, right, of people getting to where they wanted to be when they first set out to invest in real estate, right? And then a lot of people are like, where do I go next? So being able to offer that insight and back it up with proven strategies and a proven track record, I think it's a slam dunk if people, come to you for advice. I think you're just proving your worth right there. I don't think anybody's said the Beyond BRRRR strategy before, right? So balancing the insight versus the actual deal closing, what gives you the greater satisfaction? Is it being able to give people these strategies and provide them with that aha moment? Or is it, that final X marks the spot signature that when the deal closes and, giving them a little bit of financial freedom?
I think earlier on in one's career, the closing of the deal is like the focus for most people. It's that closing of the sale. But as you truly become an expert in your field, whether it's this field or another field, it evolves. And for me and for the people that I work with, it's about how many lives can I change in the business? How many people can I impact? So yeah, the deal closing is part of that, like putting the pieces in place, but, laying out a strategy for them, is really, helping them scale and bring their life or their business to the next level. That's far more rewarding than just like a single deal closing, or, it's just things evolve over time, I think, as you gain experience.
Definitely. And I'm pretty new to the real estate industry myself, as obviously working for RCN Capital. And I think hearing that perspective is extremely refreshing, right? Who doesn't want to make money off of the very lucrative real estate investment industry? It's been a proven model for, decades, centuries, maybe at this point. But to have somebody break it down and be like, we can change people's lives. This is not just about what the dollar amount in the bank account is. So very refreshing, and I appreciate your insight on that. I think that's a perfect spot to take our first ad read break. So we'll be right back with more Uncontested Investing after this. All right, let's give a quick shout out to our sponsor, REI Inc. REI Inc. is a premier monthly publication for real estate investors. Dive into a wealth of expert insights and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information available. Visit reiinc.com to learn more today. All right, and we're back with Uncontested Investing. I'm your host, Nate Zielinski, joined today by Gary Mascitis, founder of GSM Capital. Gary, we spoke a little bit about the human approach, how you kind of separate yourself from just closing deals to providing value and insight to the real estate professionals that you work with. So I think part of that, too, is you're kind of on that journey with them, right? You maybe work with an investor that's brand new, and then over the course of a few years, now they have a portfolio of 20, 40, 50 units. So can you talk a little bit about scalability and some of the tools that these investors need to have to get from point A to point Z? And that's not always about point A to point B, because these careers continue to grow.
Sure. So, yeah, I mean, I guess how I think about things, Nate, is that, mentally kind of I segment different investor types kind of based on, let's say it's the newer investor that has 0 to 10 units versus someone that's, been doing it for a few years and owns, 10 to 30 units or 10 to 50 units. The tools start to evolve that the investors need to employ in order to continue scaling and growing to the next level. And that includes even the guys, let's say someone that owns, 50 to 100 units. That's very different than someone that owns 500 plus units, right? So I think that there's a mindset shift that occurs with or needs to occur with real estate investors. As real estate investors start out, they start by kind of trying to do everything themselves, right? And Dan Sullivan would call, of Strategic Coach, would call that the rugged individual, right? And ultimately, you're going to start hitting a cap or a wall there. And, it becomes very helpful to start thinking about things, not how can I do something to, advance the business, but who can help me? The who, not how concept is something I think that's very powerful and can be incorporated at all these different levels. So, so maybe with 0 to 10 units, you're self-managing your properties. You're the one that wants to have all the conversations with the lenders, the banks, the RCNs of the world, the mortgage brokers of the world, whoever that might be. But as investors start to grow, they'll inevitably want to gravitate towards what really lights them up, right? What they enjoy doing. So, it just kind of as an example, as those people that start to grow to 50, 100, 500 units, they're not going to want to take their time dealing with lenders all day long, right? They want to do what lights them up and makes them money. And the concept of building a team, I think, really grows exponentially as the size of someone's portfolio grows.
Yes. Okay. Great. And I think that is a perfect transition into your investing career now. So everything's been going well with GSM Commercial Capital. You've been doing that for 7 or 8 years now, I think, going back to 2016.
Yes.
And we've talked about your foray into the investment space yourself. Can you talk a little bit about that? Share some of your experience. I think you're very early on in the process, maybe, but
yes.
Wearing different hats, going between back and forth, and just some insight about what it takes to become an investor yourself.
Sure. So, I'm in the process of basically shifting my mindset, right? I started the business in 2016. I was effectively a solopreneur for a few years and then turned into an entrepreneur and starting to grow the company, hire people, look for more growth, et cetera, et cetera. So, most of my time outside of my family time has been spent with how to grow the business and serve more clients and change more people's lives. So now I'm at the stage where, the company is at a level where I want to start diverting some of my time towards real estate investing. My plan is not to do it in the 1 to 4 family space. As I mentioned, I have very good friends that had brought me into the lending business. We're going to start doing some joint projects going forward. So right now we're working on an 84-unit senior housing facility in Phillipsburg, New Jersey, as well as that property will have a small neighborhood grocery store built on it. So that's going to be my first, commercial real estate project that I'll personally have some involvement with.
Nice. That's impressive. Any challenges that have come up, or is it still?
Absolutely. There's challenges on every deal. Like, even deals that are, single family, 2 family, you would think were simple. There's always some monkey wrench that comes up during a deal. So, we're going through payment in lieu of taxes, a pilot program right now where we're trying to get the taxes figured out for once the project is built to make sure the cash flows are going to be there. So we're working through that with the town and the state, et cetera. So, we originally anticipated closing a couple months ago, but extended it out just due to, some of these things are part of the process.
And I think that's a great lesson for the audience to hear, right? These, even somebody as experienced as Gary, they always come up. So it's problem solving. It's relying on the team that you've put around you. It's, strategic coaches, as you've mentioned. Maybe you've heard some real estate insight from a podcast, from an article. So the information, the help is out there. and don't get too frustrated if something comes up. And again, we have some time for our next segment, which is deal breaker, deal maker. So I think, as you mentioned, right, there's always things that can pop up that these deals break down. What are some of the things that you see on a consistent basis where something pops up? Maybe it's a document, maybe it's something that somebody says, maybe it's something that somebody doesn't say, right? Sometimes it could be lack of communication. Sure. So what are some common themes that you see that deals break down? And then, as you pointed to, just being part of the game, right? Things pop up, but you have to maneuver around them.
Sure.
What leads to success when it comes to closing deals? If you can kind of juxtapose the two there for us.
One of the things I learned on Wall Street that also applies to real estate investing is hope is not a strategy. So, whether it's, a document missing or, like you said, communication not being had, like a misunderstanding or whatnot. And, the other saying that comes to mind is lessons will be repeated until learned, right? So, as we go through and gain experience, we need to learn from that experience. If it's about getting a system in place, a team in place that you can, check all the appropriate boxes and execute. And, the one time that you try to circumvent that process is going to be where it's generally going to come back and bite you. So whether it's not asking the real estate investor if they have any liens or judgments against them, and they come up, in the title process when you're already, a couple weeks into a loan, or just it's about getting a process together that works and is repeatable. That is probably the biggest element I think that needs to be focused on.
Yeah, I agree. That was another great piece of insight, Gary. The process at the end of the day, if it's tried and true, usually wins out most of the time, right? If you have something that's proven to be successful, don't veer away from that. You can always add pieces to it and make it more successful. But I think, like you said, when people start to branch out and not stick to what has worked in the past, they can start to get in trouble. So part of that process, comes with a sense of security, sense of accomplishment, sense of it being efficient and repeatable, right? Mm-hmm. When those processes break down, doubts start to creep in. And I just wonder, for you who's been, in the business world for 20, 30 years now with your experience on real estate and transitioning into lending, have doubts ever crept in for you at any point of your career as you made that transition from lender and maybe now to investor? I'll let you, pick what area of your career you want to hit on, but I think overcoming the challenges that the real estate industry can present to people is huge to hear about, and how people maneuvered around those and continued to grow.
Sure. Yeah. So nothing moves in a straight line. So there's always ups and downs and challenges to overcome. So yes, while, for example, Wall Street was great prior to the financial crisis, it was very dislocated for years after that. So, I went through periods of doubt and change during that time, and, not really knowing how to, whether or not the skills that I learned were transferable to another industry. And, so I think it's about being able to transfer your skills from, many skills are transferable if you have the outlook and the, kind of a positive way to look at incorporating the sum of your experiences from whatever you've gone through prior, and to be able to parlay that into a different industry. I think it's easier than most people think, but most people, get kind of like a deer in a headlight, when there's some critical, point in their career that they come to, whether or not it makes sense to, make that leap.
I think what you just said is huge for people out there, especially newer investors, people in the real estate investment space, right? a lot of that work is introspective. You have the capability, but the doubts start to creep in, right? So how do you overcome those doubts? Knowing that it's, you're capable of it is huge to hear. I think just reassurance, reaffirmation, sometimes that's the best message, right?
Absolutely.
Just believe in yourself. A lot of people have gone through it and been in similar situations. Obviously, your situation could be extremely unique and personal to you, but knowing that people have been there before and bounced back from it is huge to hear, and I think you're a great example of that. As we move into talking about your reason why, your passion project, I think you can definitely count on some experiences and some pieces of literature that have helped you through that process. Just not going off of and hearing the stories of, I was down on my luck, but I, kept my chin up. You can offer people some tangible things that they can go to after this episode and start working on themselves and bettering themselves and instilling that confidence. You want to share some of that?
Absolutely. So, yeah, when I went through periods of doubt in, let's say 2014, 2015, before coming into lending, what I find is a lot of times people you can wall yourself off from a growth mindset and from self-development and self-improvement. And a couple of years ago, I joined a group called GoBundance, and basically, in the last 20 years, prior to the last 2 years, I probably haven't read 20 books in the last 20 years. Last year, I was introduced to somebody through GoBundance. His name is Hal Elrod, and he wrote a book called The Miracle Morning back in 2012. I had never heard about it until, the last year or so. And it's about how to, use self-development and, to build a certain mindset and certain practices in your morning every day in order to improve your life. So there's an acronym that he uses called SAVERS. It basically stands for, Hal had a couple near-death experiences in his life, and coming out of the first one of those, he basically wanted to see what the most successful people across all different walks of life use for morning practices to start their day to make it better. So he basically, instead of like one or two that a lot of people use and these people use one or two, he basically pulled together like the 6 most common practices, and he uses this acronym SAVERS. The first one stands for silence or meditation, introspection. The second one stands for affirmations, which you were just talking about. The third is visualization. The fourth is getting exercise into your morning every morning. Getting the R is reading, every morning. And then the last one is an S, which stands for scribing, which is just basically journaling. So the J didn't really fit.
Savers doesn't have as much of a ring to it as Savers does.
It didn't really fit. So, so last January, I started, with his Miracle Morning, with exercising in the morning, with, putting together and reading affirmations, visualization, exercise, etc. And it's been life-changing. I read 20 books last year, and every one of them in their own right were life-changing books. Can you integrate everything from 20 books in 1 year? Not necessarily, but there's so much power from setting aside that time each morning to do the reading, to go out and exercise, whether it's a 45-minute walk in the morning or going for a bike ride every morning. Between 5 a.m. and 8 a.m. is the time that I carve out in my day every day for self-development and self-improvement. And it's just such a powerful way to start your day.
That's awesome to hear. Yeah, and I think people can take a lot from that, right? I want to read that book now that you mentioned it. And we spent a lot of time over the past, half hour here talking about your role as a lender and helping change people's lives. And I think what you just went through and what you described with the Miracle Morning has allowed you to amplify that, right? So a lot of people might have this stuff or this motivation already inside them, and this literature and these methods are just, the icing on the cake that helps them actually achieve it and become even greater than they already are. So
Sure.
I will definitely be checking out that book, Miracle Morning, if people want to check that out after the episode.
Highly recommend it. And the funny thing is, like, I was one of the early adopters of Tony Robbins back in the 90s, and I kind of moved away from that after I got onto Wall Street. It's something that's come back. It never goes out of fashion, so to speak, and it's so powerful when you open your mind to growth.
Yeah, and it's so easy to dismiss it as cheesy. I think you can do it by yourself, right? You don't need to buy any of these books or go to these seminars, right? But I think, it is that mindset of, like, if you're open to it and you allow that stuff to have an impact on you, it can be extremely positive.
Absolutely. It's life-changing.
Yeah, so you're talking about getting, insight, information, perspective from other authors and, public speakers, right? But do you do any of that yourself? Do you do mentoring, teaching? Are you, is there ways the audience can hear more of you and maybe some of the messages that you're sharing on other platforms?
Sure. So, mentoring, teaching is something that I kind of incorporate into my daily discussions with clients and prospective, clients, with real estate investors. So it's kind of part of my day, but I would say, public speaking, I've been on, a few podcasts over the last year. I do some speaking at real estate meetups, multifamily meetups, etc. The funny thing is, I haven't really put a lot on social media yet, but I plan on. There's plan for change, for that in this year and kind of going forward. One of the things I realized, is as an entrepreneur and a human being, sometimes we have a tough time being vulnerable, right? And taking a look at our strengths and our weaknesses. And one of the things that I found is, so although my business has effectively been built 100% through referrals up until this point, if my goal is to change the lives of as many people as I can, I'm maybe letting ego get in the way of, well, it's more important what you do with that person and that investor and how you mentor them or teach them or help them grow than it is where they come from. So I've realized the power of social media, which, quite frankly, I kind of shunned a lot of the social media side of things. Funny story, my kids, I have a 17-year-old who's special needs. I have a 23-year-old son who works in the business and a soon-to-be 27-year-old daughter. So they'd send me, a text with something on TikTok. I'm like, I'm not looking at TikTok. I'm not downloading it to my phone. And I think it was Ed Milet in a podcast sometime over the last couple months basically said, whether or not you like a platform, if that's where your clients are and those people whose lives you can change, then you need to move past that and start using them. Yeah. So I've changed my mindset there and plan on putting out a lot more video and teaching, et cetera, going forward.
A lot of things I want to unpack there with what you said, but with the TikTok example, if you hear that app or if TikTok comes up in conversation or somebody even sends you one, right, the first thing that pops into your mind is viral trends, dancing. What do I need this for? I'm just, aimlessly scrolling, right? But TikTok has recently come out with a commercial where they went into middle America. It's these family of farmers, and they're actually educating people on how to run a farm, the care that you need to give to the animals, different strategies to get the best and healthiest out of these animals. So I think that right there is kind of what you're talking about, right? Like, absolutely. You can find your audience on TikTok if you're looking for it, if you're talking about it, you're using the right hashtags, right? So ego definitely plays a part in that. You're not alone by any means of like, TikTok, what is this, right? But It's there for the taking. And, you ask a lot of those motivational speakers, people that are in the industry. Gary V is definitely one of them that comes to mind right away. There's so much power in social media.
Yep.
The other thing that you mentioned there was the public speaking at investor meetups, right? We spent some time talking about the collaboration aspect of real estate investing. You're doing it yourself with the 84 unit senior citizen investment that you have going. How important are those investor meetups if people are on the fence, kind of like social media, right? If people are on the fence about going to those, can you talk a little bit about what you get from that and how powerful those can be?
Sure. I mean, look, I don't know what would prevent someone from going to it other than, fear or apprehension, right? I mean, there's so much experience that's in one of these rooms, when you go to an investor meetup, you could have, whether it's 10 people in there or whether it's 100 people in there, there's so much that can be drawn in terms of information, experience, insights into helping you grow your real estate business or portfolio or whatnot. So look, I'm all about standing on the shoulders of giants and not having to recreate the wheel every time you want to do something. So collaboration is huge. It's a huge mindset shift to open yourself up to go down that path. Absolutely.
And I've been a part of a few of those myself, working with RCN Capital. Some of our networking events are those investor meetups, right? And, you don't always get it from the first time you go or the first couple times you go. It definitely takes a few cracks at it to get that sense of community, get that fear and apprehension out of the way, right? But I think you can attest to it as well. You'd be surprised how many people that go there that want to share that information, their wealth of knowledge, their way of doing things. Some of it could be tied to ego again a little bit, but a lot of it comes from people just wanting to help, people wanting to give back. Real estate investing doesn't get enough credit, I think, for fostering that sense of community and actually having individuals within it that want to help people that are unsure, uncertain, haven't had success yet, haven't found that aha moment in their investment career. And I think those places especially are a perfect spot for that.
Yeah, I think what that brings up is having a scarcity mindset versus an abundance mindset. There's so many people that have so much experience that do want to share, do want to help, mentor, tutor, whatever the case is. So there's people there that are looking to give, and from their giving, they're also getting, right? They're benefiting from that. I think, if you're going there with just the mindset of being a taker and not, giving. Anytime I've been in a situation, the more I give, the more you get back as a person, whether it's direct or indirect. I think that's, a mindset shift. Like these real estate investors that are successful, that have done things before you or are 5 steps ahead of you. It's not just like this finite little market where it's like you need to have a scarcity mindset towards things. It's not all about just, competing for the same thing. There's a lot of opportunity out there.
Yeah, this has been a great conversation. So let's pause for a second, do our last ad read of the episode, and we'll be right back to wrap things up with Gary. Thanks for sticking with us on Uncontested Investing. Another quick break for one of our sponsors, obviously RCN Capital. RCN Capital strives to build long-lasting relationships with our investor clients. From the moment you sign up, you'll be assigned to a top-notch loan originator. They'll work with you through every step of the process on your current and future deals. Our team is committed to responsiveness, transparency, and clear communication, ensuring a seamless transaction from start to finish. Click the link in our bio to fill out an application today and speak with an RCN Capital loan officer. All right, so as we wind down here on this episode of Uncontested Investing with Gary Mascitis from GSM Commercial Capital, Gary, I want to give you the floor here. How can people find you? I think some of your answers today have been extremely helpful, extremely insightful. You have a great perspective that I think more people should hear about in the real estate industry. So how can they find you and learn more?
Sure. So, the website, GSM Commercial Capital, you can find us there. You can find me on LinkedIn, Facebook, Instagram. Again, I haven't really used them for a lot of distribution of content, but that's where people can find me.
Awesome. Awesome. Thank you so much. And thank you to our audience for joining us again. If you enjoyed this episode, please do not hesitate to hit that like button, hit that subscribe button. That's going to help me out so much. As you know, we've started a new chapter of Uncontested Investing. I've taken over the hosting duties. So if we see those subscriber numbers go up and the like button on the video, that'll make me smile and give me the confidence as we continue to grow here at Uncontested Investing. For Gary Mascitis of GSM Commercial Capital, I'm Nate Zielinski, your host. Thank you for joining us. We'll see you in the next one.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.